Right, we can bring you that Bank of England decision right now. Rates unchanged at 0.25%. The two asset purchase programmes unchanged as well. The target of the Bank of England's asset purchase target, 435 billion sterling. The corporate bond target at 10 billion. The Bank of England, the majority seeing scope for stimulus reduction in the coming months. To get into this, the vote 7-2 on rates. Some expecting that it might become 6-3. We remain at 7-2. We can cross over now to London and bring in Bloomberg's Guy Johnson, who's standing by and looking through this. Guy, what pops out to you just on the initial read?
What pops out to me is that sterling is spiking on the back of this, John, despite the fact that we have a 7-2 and Andy Haldane decided not to go with the Hawks. He's always been on the precipice. He decided to stay with the pack and despite that, because of the fact that we've got a majority talking about stimulus over the next few months, a reduction of stimulus over the next 3 months, sterling is bid. Now, remember, John, that sterling has been reasonably well bid coming into this, so the fact that it's reasonably well bid on the back of it, I think is quite interesting.
Not new that the Bank of England is saying that the market is underpricing future interest rate rises, Guy. Once again, the Bank of England reiterating that line that the market is underpricing future interest rate hikes. Why do you think that is? And ultimately, will the Bank of England follow through on the kind of things they've been talking about now, Guy, for quite a few months?
Look, everybody I talk to says market pricing on short rates is rational right now. So, John, if you take a look at short rates, we've now got an 80% probability that the Bank of England will deliver a hike in February. 50% for November. So the short rate market is telling you that the bank is going to execute on a hike fairly soon. But the problem is, though, that everybody you have a conversation with at the moment says, yeah, that kind of makes sense, but... And then you have a whole conversation about why it's never, ever going to happen, that the Bank of England is not going to be in any hurry within the next 6 months to hike rates. So, yeah, the Bank of England is saying that the markets are underpricing it. The market has come a very long way in terms of its short rate pricing on where we stand with expected rate hikes. But just anecdotally, the markets, the people we talk to, don't seem to believe that it's actually going to happen. So maybe they feel they still need to be knocking on that door.